Alright, today we'll be doing chapter 6, business objectives, and chapter 7, books of crime and trade. Okay, and this is basically all of section 2. After this, we're going to start section 3, which you can say is like the fun part or the hard part of accounting. Like, people find it hard sometimes. And this so far was the basics. Section 1, you need section 1, like you really need section 1. And section 2, you need section 2 because MCQs and most of that stuff is also on section 2. All right. And you just need to know this because books of primary is important as well. But section 1 is just super duper cool. Okay. Do not forget that. If your section 1 is strong, like if your basic is strong, then everything will be easy. Anyway, so business is business documents, and business documents are, we have like 6 or 7 of them. There's your invoice, debit note, credit note, statement of account, check, and receipt. I think I'll change the color to like, I don't know, what color should I say? Anyway, complete pro forma business documents. I don't know what this is, but I know what this all is, so I'll just teach that. Understand the use of business document as sources of information. Now, sources of information in the sense like using these business documents, we make our income statement and balance sheet and financial statements. All right. Account for trade discount. While discussing cash discount in yesterday's class, I talked about trade discount, but since they didn't start it there, I didn't explain it. Like I just mentioned the word trade discount. Anyways, so this is chapter 6, and they're saying we learn more about business documents in chapter 7. We're going to be covering both of them today. As in chapter 2, the entries in accounting were made using business documents. Both documents received and issued by a business are used. So, like receive is, for example, when you buy something and you receive, I don't know, you can receive an invoice, right? When you buy something, so you will use that to record your purchases. And when you sell something and you issue an invoice, you will also use that to record uh to record your sales. All right, and we'll be discussing this in detail. So the first thing we have is invoice. When a business sells goods, it will issue an invoice. And when a business, is not written here. Okay, well, let's just read the definition. An invoice is a document issued by the supplier of goods on credit, showing the details, quantities, and prices of goods supplied. So like this is the stuff that comes in an invoice. The details, the quantity, the price of goods supplied, and the cash discount and the trade discount. Okay, so basically every single thing comes in the invoice. Yeah, more or less. And then trade discount, we'll look into it. Remember that the invoice can be over here. Yeah, from the supplier's viewpoint, an invoice may be described as a sales invoice. From the customer's viewpoint, it may be described as a purchase invoice. So this tells us that whether you make sales or whether you purchase goods, you will be getting an invoice. When you make sales, you will be the one issuing the invoice because they say it right, issued by the supplier. Okay, and then the customer will receive it. And when the customer receives an invoice, they can record it as purchases. All right, makes sense. On invoice, both the amount you bought on credit, the purchase returns amount. Yes, exactly. So in case like over here in this example, they bought something for 20 with 20% trade discount. The price was 510, and let's just say the question tells you that the price is 510 and they have 20% trade discount, and then the question says that they return $500 of goods. So you won't simply reduce 500, you will reduce 500 times 80%. Okay, so you will apply the trade discount unless the question says that after trade discount your net was this much. We'll look into it later. Okay, each business has its own style, but they need to have the main stuff, the name and address of the supplier, which is like the person selling, and then the customer, the person buying, the date of the sale of the invoice. Like, for example, if I'm selling something today, I'll write it today, you feel me? All right. And then full details, quantities, and the prices of goods supplied. So, like, there's details, the name, the item, whatever, and the quantity and the prices and everything like that. Okay. Now, about trade discount. This is a reduction in the price. The rate of this discount often increases according to the quantity purchased, encouraging customers to buy in bulk. You know that the purpose of trade discount is a reduction of price in goods, is a reduction in the price of goods. Like that's exactly what discount means, right? The reason is to encourage bulk buying. Okay, it uh, what do you mean? It is also to give businesses. Oh, okay. Yeah, well, I think I'll explain this as well. So, for example, if I'm selling in a market and this is like the entire market, this is my shop, this is my competitor's shop. I have something and the competitor doesn't have it. Okay. So the competitor goes like, I'll buy it from you, but give me a cheap price. I also want to sell it and I also want to earn a profit. So I'll sell it to him cheaper than I would sell to a normal person, but I will still make some profit. And since he will be buying in bulk, he will get it for cheaper. That will also be trade discount. Okay. All right, cash discount and trade discount. Cash discount, we did it before. Cash discount is a discount, a reduction in the price of payment. Okay, this is a reduction in the price of goods. Cash discount is the discount you get for paying early and you get it on your payment, so you have to pay lesser. And trade discount is a reduction in the price of goods. It relates directly with the quantity of goods. If you buy a lot of goods, you get a lot of trade discount, and it's always it's like the supplier's choice. Okay, it's not like you will always get trade discount. It all depends on the supplier's mode. Supplier likes you, he'll give you a lot of trade discount. He doesn't like you, he won't give you discount. If you buy a lot, he will give you discount. If you don't buy anything, he won't give you discount. Makes sense, right? All right. And then trade discount is shown as a deduction on the invoice. This is the only place where trade discount is shown. Okay, so you don't record trade discount in any of the ledgers or cash book or anywhere. Okay, cash discount is not shown on from an invoice. It's only shown like it's only a statement over here. You see terms, 2.5% cash discount if the account is paid by 31st May. So right now they're not deducting this amount. The total amount the person owes us is 408 400 40,800. Yeah. Why did they write it like that? It's 40,800 or 488.00. I'm crazy. It's supposed to be this probably. 408. What happened? Will I get cash discount if I buy foreign currency? Yeah, I won't say thanks for that, but whatever. I don't even know. You can try it. Maybe I just said it all depends on the supplier's mode, depends on the guy of money exchange, that kind of stuff. Anyway, so this is not a discount yet. It will be a discount when the person pays on time. Okay, so the customer receives the invoice and uses it to record purchase. The supplier keeps a copy and uses it to record the sales. We already discussed this. Four items of information shown on an invoice: the details of the product, the quantity, the price, and the date. You can say that. The address of the supplier, the address of the customer. Carneil sells goods on credit to Hajjan and issues an invoice. The account to be debited and the account to be credited. Account to be debited and account to be credited. So you see now they're asking us the same thing but in different people's books. The difference will just be of sales and purchases. It's pretty simple. Let's solve it. Sells goods. This guy sells. So when you sell goods, you credit your sales account. So in this person's book, we credit sales. Whoa, my stylus is going crazy. I don't like this. Anyway, and you debit this guy because it's on credit. Okay. Right now we don't have any bank, so that's why we'll be using this. Let's just write HR, and then over here it's gonna be debit purchases and credit Karnail guy. My stylus is going crazy. I don't like this. Whatever. I will understand credit note probably. Maybe for export. Oh wait, is everybody experiencing the same problem? Is everybody stream lagging? Anyway, debit note is issued by a purchaser of goods, meaning like the customer issues it on credit. So I purchase goods on credit and now I want to request a reduction in the invoice received. Now, what does request a reduction mean? I should explain it. There's different types. Mm, the customer should check that goods are received in satisfactory condition and they are exactly what was ordered. So, when you buy goods and when you buy goods on credit, Then when they come to you, you have to check them. You check if the quantity is same and everything, like it's all what you ordered. If it is not, or if there's any shortages, overcharges, or faults, then you can simply return your goods, right? And if it's shortages, you request a debit note. You tell the supplier that, yo, I didn't receive all of the goods. You have to give some back to me. Like you have to give me some more. If it's overcharges, you issue a debit note. You tell the supplier, yo, I have like you charge a lot of money. Just take this back. And if it's undercharged, it's gonna be a credit note. It's gonna be an invoice. Because like you have to pay the money. Yeah, this is done by issuing a debit note to the supplier. Each business has its own style, but they all contain this following main information. Again, the same thing: the name of supplier and then the name of customer, the date, the name and address of supplier, the name and address of customer, the date, and then the details and quantities of the goods returned or overcharged. So in the invoice, we were having the goods, details and quantity of the goods that are being sold, goods are supplied that are being supplied, and here we are having the details and quantities of the goods that are returned or overcharged. Let's have an look at the example. So Steve and Sue, who earlier purchased goods, see this guy is purchased this much goods. They're returned goods to the waving shed and issued the following debit note. Okay, so this is their address, and this is the customer's address, and this is the supplier's address. I don't even know what's going on with my pen, bro. It's not working. Anyway, so they're returning 10 meters, whatever. The price is $6. The quantity is 10. It's like 10 meters. So it's becoming 60. Now you see the amount is 60, but the like after deducting trade discount is becoming 48. So if a question asks you to record the purchase returns, they will give you the amount 60 and you have to deduct the trade discount yourself, and this will come in the purchase ledger and purchase return journal, like everywhere. All right, reason for return, and please issue a credit note. Okay, credit note. This debit note is not an official document. Okay, neither the supplier nor the customer makes any entries in the accounting record in respect of a debit note. So this does not affect our accounting books, our ledgers, or anything. This is not an official document. It's just a request. It's a request by the customer to the supplier. A request for what? For a return. Where is it? Reason for return. Please issue a credit note. Okay, so they're requesting it, and it can be the reasons can be a shortages, overcharges, and false undercharges as well. That you can just inform. All right. Two reasons why a customer may send a debit note to a supplier of goods on credit: in order to return the goods or in order to inform the supplier about any overcharges and faults. Debit notes are never entered in the accounting records. Okay, I think we can move on. When there has been an undercharge on an invoice, most businesses will issue an additional invoice. However, some businesses may issue a debit note instead. Okay, when there has been an undercharge on an invoice, this basically means that, say I bought goods for 1,000. Oh, this is pissing me off. I might break my pen right now, but like it's not working. Okay, well, say you bought goods for $1,000, and oh, I think this undercharge on invoice means like the goods are worth $1,000, but the invoice only has it written as $800. Okay, my pen is not working again. This is pissing me off. So yeah, the business will issue another invoice, and some businesses may show a debit note. This will be entered in the books of both supplier and customer in the same way as the original invoice. What is this? This is the additional invoice that the business will issue, or the debit note, both, because we have to record this undercharge. We have to correct it. Okay. Anyways, I'm not teaching good today, am I? Alright, a credit note is a document issued by a seller of goods. So before we had debit note, it was issued by the buyer, it was issued by the customer, and now it's issued by the seller, which is the supplier, right? On credit, to notify of a reduction in an invoice previously issued. So first it was to request, and now it is to notify. So first the customer requested a reduction in an invoice previously issued, and now the supplier is notifying. So like it's an answer to the debit note. Okay, So a credit note is basically a response to the debit note. When goods are returned, reported faulty, or where there has been an overcharge on the invoice, the supplier, before it was customer for debit note, now it's supplier may issue a credit note. As with all documents, each business has its own style, but they need to have this same thing: name and address of supplier, name and address of customer, date, detailed quantity, price of the goods returned or overcharged. Now looking at the example, you see before it's like very similar to the debit note. The debit note they requested a return for this much, a return of $48. नहीं नहीं. All right. Previously, we saw that the Stevenson requested a return of $48 or 4,800. I don't even know what this is, but yeah, now they issue Waving Shed issues a credit note to Stevenson and does this return, notifying reason for issue, wrong color supplied, and here you see reason for return, wrong color supplied. Please issue a credit note, and the credit note is issued. So in short, it's literally just a reply to the debit note, and this is an official document. The customer receives and uses it to record purchase returns. The supplier keeps a copy and uses it to record the sales returns. Okay, so using this, we record stuff, but using this, we don't do anything because this isn't guaranteed. I sent a debit note, but the supplier rejected it. Boom, no purchase returns. Okay, that's why we don't do anything using this, but we record stuff using our credit note. Anyways, the thing is, like, I'm feeling that I'm not giving much detail, but there is nothing to say. Like, just look at this. What do I even say in this? Anyways, moving on. Two reasons why a supplier may send a credit note to a customer. Look, a supplier is sending a credit note in return to the debit note. So there has been an overcharge or undercharge, or goods are returned faulty, goods are returned, reported faulty, or has been an overcharge on an invoice. Not undercharge, sorry. Like in undercharge, there can be a debit note issued, but most businesses just issue an additional invoice according to what we read over here. Most businesses will issue an additional invoice. Some may issue a debit note instead. Yeah, they don't really ask this stuff in the exam. Anyways, we done with credit note. Now statement of account. Oh, 1 second. This one. Harbachan issues a credit note to Cornell. Name the account to be debited and to the account to be credited. So this guy issuing a credit note means that he is the customer or supplier. Does anybody want to answer? Yeah, that's perfect. This guy is a supplier, and in this case, Colonel is a customer. No, no, maybe, but you have to understand it. It's very simple. All right, name the account to be debited and the account to be credited in Colonel's books. So here, Colonel is doing purchase returns. Does everybody understand why you credit purchase returns? Oh my God. Dear customer, what are you trying to say? What did I even ask? I forgot what I asked. I'm just angry that my stylist is not working. Paid so much money for this part. Whatever. So in Colonel's books, this is the customer's books. When you purchase goods and then you receive a credit note, that means you have made purchase returns. You see, customer receives and records the purchase returns. In this case, Colonel is a customer receiving the credit note and will record it as purchase returns. So we credit purchase returns. Okay, credit purchase returns, and we will debit our beautiful friend here since it was bought on credit, since the goods were bought on credit, the amount we owe to this guy will decrease, and that's why we have to debit his account to show that decrease. Okay, so also debit purchase, yes, exactly. But like we don't really rely everything on this. Okay, Wow, bro, wow, my stylus is working perfectly. The hell? Name the account to be debited and the account to be credited in Harbajan's books. So this guy is our supplier again, and he sold goods, but now he's issuing a credit note. So he's having sales returns, okay? And sales returns will be debited and the customer will be credited. What's the name? Cornell, right? I'll just write this. I hope people understand it. Whole different language. Exactly. What the heck is this? Like this doesn't make sense. I don't even know. I don't even use it. It's probably my. I don't even know what's wrong with this. Whatever. So moving on to statement of account. Statement of account is basically a summary of every single thing that happened during the month. Okay, now let's just see their definition. Statement of account is a document issued by the seller of goods, means like the supplier, to summarize the transactions for the month. Okay, so it's a summary of the month and it's made for each customer. So like let's just say I have 10 customers. So for each one of them, I'll make a statement of account. Okay, yeah, well, it's working pretty fine now. All right. So for each customer, we have to make a statement of account, and it's a summary of the month, whatever happened during the month, whatever transactions. At the end of each month, the supplier will usually issue each customer with a statement of account. This is a summary for the month. The style may vary, but they all contain the following information. Again, name and address supplier, name and address customer, date, the balance owing at the start of the period. Whose balance is this? The balance that the customer owes us. Okay. Now, since there is no balance here, there's no balance here because it can be that it's their first time, or it can be that these people already cleared their balance last month or something. Okay. Oh my God. All right. So invoices and credit notes issued. It will contain all the invoices and credit notes issued. You see, this is one invoice issued and this is one credit note issued. Payments received. We did not receive any payment. The last amount shown in the balance column is the amount due. They still owe us 360. They did not pay anything. And any cash discounts allowed? We allowed cash discounts. This was the term. We didn't give anything yet. We still mentioned the terms because like it hasn't been 30 days. 31st May. Okay, never mind. The discount is gone. These people missed it. I don't know why it's written, but yeah, payments received. No, you just record this. Record this. The balance owing at the end of the period. This is the balance owing at the end of the period. Okay, is that clear? So basically, anything that's debiting will increase the balance, and anything that's on the credit side will decrease the balance. Okay, and that is because this is a customer, which is a trade receivable. Oh my God. Yo, I'm so done. No, bro, I cannot do this. I don't even know what this is. No way. Okay, whatever. I'll just do it with my hand. What do you say? One second. Uh, where is it? Let's see, whatever. So, okay, so a customer is a trade receivable and trade receivables are an asset. Can just say that plus minus thingy. Anything that comes on the debit side of any credit customer, because credit customers are trade receivables, anything that comes on the credit side will increase the amount they owe you, and anything coming on the debit side, like, anything coming on the debit side will increase the amount they owe you, and anything coming on the credit side will decrease the amount they owe you. I feel like breaking my stylus, but it was expensive, so I let it break. Whatever, I'm done with this. You guys get the concept of probably. Neither the supplier nor the customer makes any entries in their accounting records in respect of a statement of account. You know why this happens? Because this is summary. Like everything's already recorded. We already recorded this. Like this was already recorded as purchases or sales, and this was already recorded as sales returns or purchase returns. So like for the supplier, it's gonna be the sales returns, and for the customer, it's gonna be purchase returns. A statement of account is a reminder to the customer of the amount outstanding. Okay, so you can see that they have not paid 360. They bought the goods on 3 April, and they have not paid anything till 30th April. Okay. Oh, sorry, it was 30th May. So they have time. They have one whole month to pay. Okay, but they haven't paid anything, and this is just to remind them that you have $360 left. You have to pay it right now. This can be checked against the customer's own records to ensure that no errors have been made by either the supplier or the customer. So when you have a statement of account and the customer has his, balance owing to the supplier, he can check and he can be like, "Yo, in my books, I owe you like 300. What happened?" So then there can be fights and all. We can finally witness some drama. But that doesn't happen. Rarely happens because everybody has proper record. It's easy, but like I don't know what's the main torture. Like the reason why it's torture is just because of my stylus right now. Like what exactly is this? I'm struggling with writing 3 letters. Okay, whatever. Statement of account is never entered in the accounting records because it's a summary of everything that already happened and you already recorded all of that. Okay, moving on. One purpose of a statement of account, it is purposes. You can just say it's a summary of the month. It's a reminder to the customer of the amount owing. It's to check. It's like to reduce fraud. You can put anything. Okay, it's also check, check. Checkmate. Anyway, check. Many accounting records are paid by means of check. Other methods, check is, check. Other methods of payment through the banking system are credit transfers, standing orders, direct debits. We already did this, like, I don't know, a few days ago. A check is a written order to a bank to pay a stated sum of money to the person or business named on the order. When you just give a check to somebody and you go like, yo, go to the bank and tell them that take the check. So the waving shed is paying, I don't know about this, it would pay the waving shed $350 only, and this is the guy who is, what do you call it, who's giving the money. Okay, so you take this to any bank, probably any bank. Where is it? To a bank. Yeah, any bank, probably. Well, whatever. I'm getting so tired. This is boring. So yeah, check. Everybody knows what a check is, probably. A book of printed checks is issued. Pre-printed checks is issued by the bank. So the customer, the bank gives this book of checks to you, to the supplier, to the customer. Sorry, because like this is the guy paying. A customer is only required to complete the necessary details of the date, amount, and the person or business to whom the money is to be paid. The details of the payee, in this case it's waving shed, and here says the amount 351. This is the check counterfoil. Okay, and this is the actual check. So this part goes to the bank. Coming from, yeah, this part goes to the bank, and this is the part that the customer will keep for himself to record, to keep a record. Okay, it's probably written somewhere here. Check is a written order to a bank to pay a stated sum of money to the person or business named on the order. So you see that when you give a check to somebody, it doesn't mean that you're giving money to them, but it also does mean that. And that's why when we receive a check, we record it on the debit side of our cash book. We record that we have received this money. But whenever we give that check and the check is dishonored, it means that we did not actually receive the money. We recorded it already. So now we have to record it on the credit side to show a decrease in the bank balance. That's why there is check dishonor. That's why they record it. Well, the supplier receives the check. A paying in slip is completed when the check is paid into the bank. So the counterfoil of this paying in slip. Like, is it paying in slip? Man, I forgot all of this. The counterfoil of this paying in slip is used to make an entry in the cash book to show the amount of money paid into the bank and to make a note of the discount allow column. Oh, that makes sense. So this, oh, okay. So the supplier receives this check, this part, okay, and the paying in slip is completed when the check is paid into the bank. The supplier gives this check to the bank. He gets this counterfoil. He takes the counterfoil of the pay in slip takes it home, uses it to record it into the cash book, and records it that I got this much money, you know, and then does the discount stuff because he's giving discount, discount allowed because the supplier gave this discount to the customer. And then this check counterfoil, the customer keeps it and uses it to make an entry in the cash book, show the money paid out of the bank, and to make a note of the discount received because it's a customer. This is the discount we received from the supplier. Now you see this date is 28th May and the date of the cash discount is 31st May. So since he paid within the date, since he paid within the period, he will get the discount. So it was supposed to be 360, but he is paying only 351, $351 only. Okay, so hell. I hate my stylus now. Okay, a receipt is a written acknowledgement of money received and acts as a proof of payment. So you can say that check and receipt are pretty much like brothers and sisters or something. Alright, a receipt is a written acknowledgement of money received and acts as a proof of payment. Since the check passes through the banking system, it can act as a receipt. So many businesses do not issue receipts if accounts have been paid by check. And then when goods are sold for cash, the customer is provided with a receipt so he can go home and he can record it into his book or whatever he wants to do. Alright, and you can see that the receipt is very simple. There is nothing much, and there is literally one paragraph and one picture given in the book, meaning that it barely even comes in the exam. Okay, it can come in MCQs, but it can only come in questions like they will ask you they'll give you like four options, and each one of them will have a list of what do you call it, business documents, and then they will say which one has only business documents, you know. So receipt will probably be part of them. Pay in slip is also part of. Okay, what the heck? I can't write anything. Let's talk about it. Okay, then this is the revision checklist. Yeah, I don't feel like reading it at all. I hate this chapter. Okay, books are fragmentary. Yay, very easy, very simple. So there's seven. There's I want to write it, but I don't think I can write it. There's cash book, petty cash book, sales journal, sales return journal. There we go. Purchase journal, purchase return journal. This is pissing me off. Whatever, one, two, three, four, five, six. That's six, and then there is general journal. Okay, and that's seven. I have to do something about my pen, but do you guys have any ideas, any suggestions? I don't know what to do with this. If I break it, it won't work probably. Okay, so in chapter 4 it was explained how the ledger is divided into specialist areas, where we had sales ledger, purchase ledger, and okay, I'm not raising. So there was sales ledger and there was purchase ledger and there was general ledger or nominal ledger. You can say nominal ledger or you can say general ledger, both work. In chapter 4, okay, divided into specialist areas and how cash and bank account are together in a cash book rather than in the ledger. Okay, so like cash book is a book of prime entry itself. We already discussed that. Petty cash book is also a book of prime entry itself. We already discussed that too. Businesses use books of prime entry to record goods sold on credit, goods purchased on credit, sales returns and purchase returns. So as I said, goods sold on credit, sales journal, goods purchased on credit, this is purchase journal, and then purchase returns and sales returns. Okay. These books are basically listing devices, grouping similar types of transactions, so which is useful when posting to the ledger. So the point of having journals is making it easier to post stuff into the ledger and grouping similar types of transactions. The use of these books means that a lot of detail is removed from the ledger. So normally you would be having, let's just look at the example. If this is our sales journal and we have one, two, three, four customers in 1 month, then in 1 year we can say we have 12 customers. I swear. I let this pen do whatever it wants for the whole day. I just want to use it for 1 hour. And like it's not like I'm torturing it. I even charge it sometimes. it has a lot of battery. You see. Anyway, disappointing. Yeah, we were looking at the example, right? Okay, so you see that is 4 customers in a month. We can say that it's like 12 customers in a year. If you directly put that into the sales ledger, it will be very crowded. Look at the sales account. Oh, it's not here or what? Where's the nominal ledger? Okay, hi here. So you see the sales account, it only has one thing. It only has credit sales for the month, 1378. Normally it would have 4 different people, like here, like in the sales journal. You see there's 4 different people. So the point of the sales journal, what exactly happened? It reduced the number of entries in the ledger. Before, the ledger would have about four entries per month, but now the ledger has only 1 entry per month, and that is also the total for the month. Okay, you can see 1378, and you can also see 1378 over here. Wait again. Yeah, it's gone. Okay, 1378. All right, so that's their advantages. Anyway, the bookkeeping can be divided between several people. Since there's seven ledger journals, since there's 7 books of prime entry, you can divide it. You can, be like, yo, you take care of the sales and sales return, you take care of purchase return, you take care of the cash books, you take care of the journal. All right. Okay, books of prime entry are also known as books of original entry or subsidiary books, but most of the time in the exam questions and everything, you would only use the word books of prime entry. Anyways, so books are primarily assist in collating and summarizing of accounting information and are useful when preparing control accounts. A very easy chapter is chapter 16. We will discuss it later. It's very simple. All right. Okay. So yeah, I feel like it's working nice. Whatever. Books of entry also known as books of original entry, but most of the time in the exam it's just going to be referred to as books of prime entry. There are 7: cash book, petty cash book, sales journal, sales journal, sales return journal, purchase return journal, and general journal. Okay, you will learn about general journal later. You have already learned about cash book and petty cash book. A book of prime entry is one in which transactions are recorded before being entered into the ledger. So you can see that in the journal, in the book of prime entry of sales journal, let's say in this book of prime entry, sales are recorded like this, right? We have them recorded at 3 April, 13 April, 20 April, and 30th April. This 30th April is transferred to sales account. So we are recording this, and only at the end of the month we transfer it to the sales account. Can anybody tell me where is the sales account? I already asked this question before once. Which ledger or which journal is the sales account in? General what? General ledger, general journal, nominal ledger, sales journal. Are you telling me that yeah, star's answer is correct? Can anyone like hear anything? It's like so loud. It's okay. You can watch the YouTube video. I'll try to upload it. I forgot to upload yesterday's. No, I uploaded yesterday's. No, I forgot to upload yesterday's. I forgot. Whatever. Can you really not hear anything at all? Can you guys hear something? Hello. Okay, okay, very cool. So yeah, we were over here about sales journal. Sales journal is a list of names of businesses which credit sales were made. Now they're just doing a lot of yeah. Oh my God, I hate this. I don't even know what to say. I feel like absolutely beating the shit out of my tab. Everything is against this man today. Yeah, I think so. It's pissing me off. Okay, well, I'll try to explain it verbally. If you guys start to see my screen, let me know. Okay. So we have a sales journal. Yeah. Okay. Anyways, you can hear me now, right? Okay. So okay, perfect. Right now we're on sales journal. The sales journal is a list of names of the businesses to which credit sales were made. Basically, all your credit customers, people who buy goods from you on credit but don't pay you right now, those are credit customers. You will record them in the sales journal. Okay. So it's gonna be something like this. You have your debit side and your credit side in your sales journal as well. But instead of a T account, it's like in a vertical format. Okay. So the sales journal is sometimes referred to as sales book or sales daybook. Uh, Now we have to record the sale, the value of the sale, the name of the customer, and the date of sale. Okay, so let's just say 3 April. Let's just look at the example below. We have it on page number what now? Page number 81. Okay, we have our sales journal. So we can see that they have 2009 April 3 Sue and Sue and the invoice number. Now you don't really need this invoice number and folio in the. I'm sorry, there's no debit credit in journals as well. Can you guys like absolutely not see the screen at all? I don't know, like anything. Maybe if I try to change the quality of the stream, it might make a difference. But like I don't even know how to do that. It's so cool. Give me a minute, guys. Yeah, well, never mind. This is sad. Whatever, bro. Today's class was not fun at all. Okay, we're talking about sales journal. So normally when you sell any goods, you just enter the date, the customer's name, and the invoice total in the sales journal. There is no debit or credit. It's very simple. It's just entering the total, just entering the sale, the amount of sale. In our example here, you can see that in the exam you don't need the invoice number or folio. You just take the name, you put the amount, you take the name, you put the amount, take the name, put the amount, and then at the end of the month, the 30th April, you're gonna transfer to sales account. Okay, since this is sales journal, you're gonna transfer it to sales account, like the T account for sales. You feel me? Okay. It's good you guys can't. It's good you guys can't see anything because if you were seeing, you would have seen my handwriting just now. Anyways, this isn't even my handwriting. This is magic. So you transfer it, and then it's going to be 1378 on the credit side of the sales account, and you're going to write total sales for the month. Okay, so like total of the month. Let's just look at it over here. Credit sales for the month, and that's again April 30. Transferred, it came from your sales journal. Okay, then the same thing happens in your sales return journal. You take your sales returns, you put the date, you put the amount directly, and then you transfer it to sales returns account. And then in your sales ledger, where you have all your credited customers, you record the individual account of all of these people. Okay, and it's just going to be double entry. So for example, normally you will credit your sales, so you will have to debit your. Anyways, they can hear it now. Well, so we were talking about it's not okay, trust me. We were just talking about this how sales returns and sales, the double entry. And now we're gonna move on to, okay, yeah, do remember this, please do not forget this. Trade discount may be shown in the journals for information, but is never entered into the double entry records. Only the net value of the goods is recorded. Now let's look at what exactly that means, right? Because I just read it, it didn't really make a lot of sense. We have our journal here. Mm, they didn't mention it. Okay, well, sometimes say there's a trade discount, the journal will write it like this. Okay, so 500 minus 20, assuming that 20 is the trade discount. Okay. Um, So 480 is the amount, and you're going to write it over here. Now this 20 trade discount is just here for reference, it's just here to make things easy for you. But you will not actually record it in your nominal ledger, in your sales account, or in your customer, in your sales ledger, in your customer accounts. Okay, you will not record trade discount anywhere. It will only be coming on the invoice. Okay, that's literally the only place. Okay, you see trade discount 20%, that's the only place. All right. Then moving on to purchase journal, very much similar, and purchase return journal is also the same thing. All you have to do, let's just look at the example. Take the name of the supplier and the amount, just put it over here, and then at the end of the month, transfer to purchase account. You're gonna debit purchase account, and that's all. Like in your nominal ledger, your purchase account, you're gonna have to debit it. Let's look at this. Nominal ledger, purchase account debited by the total of the month. Credit purchases for the month is 46. For purchase return journal is the same thing. Write the name of the supplier, the amount of return, the amount that you return to the supplier. Total, take the total, transfer it to the purchase returns account in the nominal ledger. Okay, on the credit side, because since purchase come on the debit side, purchase return will come on the credit side. And then in your what is it, in your purchase ledger, you have your supplier accounts, individual supplier T accounts. There you're gonna have to do double entry. You're gonna have to, since we're debiting purchases, we're gonna have to credit the supplier when we have a purchase and debit the supplier's T account when we have a purchase return. Okay, so it's a purchase return, we have debited the supplier's T account. It's a purchase, we have credited the supplier's T account. All right, 1 minute. I might be able to do something about the internet. Okay, I think anyways, you guys can see the screen now. The details must fill in the customer name. I No, if you're talking about purchase account, then you only have to write the total for the month. Okay, so you take it from the purchase journal and you transfer it. But if you're talking about purchase journal, then over there you need to write the customer name, the supplier name, sorry, because it's purchase journal. So you write all supplier names and you write the total amount. And in your purchase ledger, you have to write the name of the supplier because it's the individual account. Okay. Okay. All right. Moving on. Is that all? Okay. Today's class was really shit. I'm sorry for that. Okay. Trade discount does not appear in the ledger accounts. Trade discount may be shown in the books of prime entry for information purposes only. And how will it be shown in the books of prime entry? Something like, let's just say this is your sales journal. Okay. Wow. In journal, yes, you need to write the name. Can you see the screen now? I'm pretty sure you can see the screen now. Uh, okay, I'll try sharing it again. Okay, what about now? So you see there's the name of the supplier and the amount. This two is not like, you don't have to do it in the exam, okay? And the date, you need to do it. There's 1 mark for the date, there's 1 mark for transfer, and then there is probably 1 mark for both of this together. So this question, what you could say, is about 3 marks. I mean, my father was like just leaving, so he just left for work, you can say. But yeah, you can see now because I changed rooms again. Anyway, so that is all. Should I review or should I explain anything again? Or do you guys have any questions related to IGCSE accounting entirely? Any chapter? Since today's class was really bad, I feel like I can try and cover it up. On the next meeting. Okay, we can try and have a look at this. Alright. Ava maintains a full set of books of primary. One advantage of maintaining purchase journal and sales journal. So you can say that it reduces the number of entries in the purchase ledgers and sales ledger. Okay. Since they only ask for one, I'll just say one. How often do they give us receipts and invoices in the exam? Not often. Okay. And even if they give it to you, it's 2 or 3 marks. Yeah, exactly. No, it can be like in my exam, I got it for 4 marks and I got 2 out of 4 in that. Very disappointing. I think I should show my exam. Let's just see my exam, how badly I performed.